Sooner or later, those who win are those who think they can. Richard Bach. Do you think you can win? Do you think you can do this? Keep that attitude. 10 to 15 minutes a day is all we ask. I am telling you, you can do this, but you have to practice day in and day out. You don't take days off except the weekends when the markets are closed. Otherwise, 10 to 15 minutes a day every day. Anybody who's been successful at this will tell you the number one thing is perseverance. It's the number one lacking human quality I see over and over and over again. The way you get good at something is you consistently practice at it. I learned to play the bagpipes that way. I learned to run long distances that way. I mastered any number of things in life because I persisted, and that's what we have to do. This doesn't require you to be a genius. Some of the best traders I know are people with very limited educations. If it required an engineering degree, every engineer you know would be very wealthy. It's not that. It is more of an art than it is a science, and it also requires you to develop the type of intuitions that you develop by doing this. And I even hesitate to use the word intuition because the hunches you feel after you've done this for a while are based on things you've experienced and learned. And what helps you make them more than hunches is keeping a trader's journal. That is making sure to use your daily market worksheets, weekly market worksheets, and trade worksheets, particularly the trade worksheets, every time you do a practice trade. So stay with us every day. 10 to 15 minutes is all it takes. And we want you to master this. Practice to show yourself approved. Okay, what do we see going on? A strange day, everything up. I say it's a strange day because bonds and gold should be down when stocks are up, seemingly, and the inverse. And speaking of inverses, great training for you. We've got it already. It'll be in the show notes for everybody who's a subscriber. If you're not a subscriber, go to chartingwealth.com, sign up. You'll see in your notes the great training video we have is Inverse ETF Succeeding When Markets Crash. You know, there's always a bull market somewhere. There's always a bust market somewhere too. So you got bull markets and bear markets. You need to know what to do when things aren't going in the right direction. Inverse funds offer you opportunities. Take that training. I want you to practice trade those two. Okay. Let's jump into the markets. Going to start with the S&P 500 first. We see the S&P 500 up 0.20%. Check out the candle for the week. Did you read the Wall Street Journal this morning? I'm sitting here with it out in front of me, and if I can turn to it quickly, I'll tell you on B12, page B12, Fed adds $82 billion to financial markets. Big banks' demand for long-term Federal Reserve liquidity flared up again on Tuesday, on a day when the central bank extended its plans to intervene in the markets through mid-February, saying they pumped in, the eligible banks were able to withdraw $47 billion in overnight liquidity from the central bank. And it goes on to tell us somewhere in that article about the trillions of dollars of liquidity that have been pumped into the market. So you want to know why the market continues to go up? Well, part of it might be all the liquidity there. And when you put more money into the market, what happens? It inflates prices. Regardless, my friends, use that type of knowledge to your advantage in your practice trades. Market up for the week quite nicely. We see so far, now that we've gone through Wednesday, still have Thursday and Friday, we see a nice fat candle with a wick on top, price percent oscillator heading up. Check out the derivative oscillator, though, still losing momentum. Now remember, our derivative oscillator is a triple smoothed relative strength index with a little bit of the MACD thrown in there. Helps us see overbought and oversold conditions. So keep in mind how we utilize that. We love to see the price percent oscillator and the derivative oscillator cross over at the same time. Didn't quite happen with this last run up, but it's always nice when that occurs together. So prices above the weekly trend line. We go to the 2-day and we see again just really running flat right now. We don't see the price percent oscillator pulling away from the 2-day trend line. We do see the derivative oscillator gaining some momentum. We see price, well, let's check that out. Price high for the day. This is the first day of the latest 2-day candle, 329.02. What was the prior high? 328.65. So it is reaching a higher high. Price is above the 2-day and above the weekly. So again, continuing to move up. What are we seeing on that 4-hour chart? Saw some up movement in the morning, pairing off a little in the afternoon. And again, long in the tooth there. Price percent oscillator is heading down. Derivative oscillator losing momentum. So again, keep your eye on things. Don't know how high this market will go. But again, we'll just continue to watch. Let these charts lead us. We go from the S&P 500 to the tech stocks, not up very much for the day, up the least 0.04%. So 0.4%. What do we see going on as far as the candle goes? Nice big fat candle, little wick on top. Price percent oscillator heading up, derivative oscillator gaining upward momentum. Go to the 2-day chart. What do we see there? As far as reaching a higher high, 221.20 and 221.21. So we haven't, in this latest 2-day candle, only the first day into it, hasn't reached a higher high yet. And when we look at the price percent oscillator going flat, derivative oscillator is flat also. So again, things are just losing a little bit of steam right now. And look what happened at the end of the day. The 4-hour chart crossed over going down. Derivative oscillator also crossed over going down. So we'll see what that portends for the market. Remember, price is still well above the weekly and the 2-day. And remember, we pay more attention to what's going on the bigger charts than the smaller chart. All things being equal, markets tend to move in the direction of the largest chart. But also remember that entire adage, the trend is your friend until the end. So we'll continue to watch. It has been a good week so far. Markets could just be calming down, slowing down, digesting. We'll see what stocks end up doing all the way through. Now, we go to bonds, up for the day 0.66%. After 4 weeks of down movement, going into the third week of some recovery in bonds. We have a green spinning top so far. Price percent oscillator still negative and flat. Just right there on just a little bit below the 200 period moving average line. Derivative oscillator still losing momentum. We go to the 2-day chart, which is, of course, crossed over going up back on Friday the 10th. And so far, first day of this latest 2-day candle's up quite nicely. It was the biggest gainer for the day on our 4 charts. TLT up 0.66%. Derivative oscillator heading up. Price percent oscillator heading up. So again, we'll keep our eye on things, see how that candle ends up drawing. 4-hour chart, of course, continuing to head up in the morning, a little higher in the afternoon. Price well above the 2-day trend line. So again, waiting to see what's going to happen with bonds. Are we going to have a crossover going up? Or is the movement on the 2-day going to peter out? Things crossover going down. We'll just have to wait and see. This up movement in bonds and slowing down in stocks could lead you to believe that maybe stocks are going to slow down and pull back some. But again, those are possibilities, my friends. Those are not probabilities at this time. They're things we're writing down in our traders' journals, paying attention to, watching. Remember, typically, bonds and stocks move conversely, inversely. So bonds are going up, stocks are going down. When you see things starting to slide sideways, trying to figure out which way things are going to go, keep your options open, but pay attention. And again, the more you practice this, the more you pay attention, the more you're in the market every day. And again, you don't want to overload yourself with too much data. That's why we say 10 to 15 minutes. You don't need to spend hours a day doing this. You're not an analyst. You're not working on Wall Street. You're not a market maker. We want you to just watch, pay attention. Don't burn yourself out, but by all means, be in the market a few minutes every single day to know what's happening. Now, we leave bonds. We go to our last chart. Our only commodity, gold. And what is gold doing? Well, I'm very happy. It's up 0.58% for the day. Remember, we had a weekly vertical crossover back on Friday the 10th at the end of the week. So far this week, we've got a red open box candle. That means a slowing of the uptrend, but it is moving up some. Derivative oscillator gaining upward momentum. Price percent oscillator still heading up. And it's nice to see price above where our jumping in point was on Friday, somewhere around I think it was actually higher than 147 at the end of the day. Again, Heiken Ashi candlesticks don't always make the best. That's why we record those on our trade worksheets, but I don't have it in front of me right now. Shame on me. But anyway, things are higher than they were on Friday. That is good. We're going to go from there to the 2-day and look at the 2-day. It's starting to head up again. It had been just bone flat, and now it's moving up some. Derivative oscillator losing some momentum. Still, we have a little green spinning top that's forming. Indecision tending up. So we'll continue to keep our eye on things and hope that we see an even bigger green up candle tomorrow when that 2-day candle closes. 4-hour chart, after bottoming back on Tuesday morning, it's nice to see a day and a half of up movement. Price percent oscillator still moving down, but paired off its stronger down moves. Derivative oscillator losing downward momentum. So we'll keep our eye on things, see how gold shakes out. That is it for the review today. Remember, if you're in that practice trade on gold, make sure that you have your profit and loss bands on there. You know what your loss parameters are, and you also know what you're willing to cash out of gold on as it hopefully continues to move up. Very important to have your loss parameters known and to employ those. You don't ever beat yourself up when those are hit and you pull out. Again, it is losses that kill you. Profits are never a problem, but losses will ruin you. That makes sense, but you wouldn't believe how many people forget it. And they lose, and then they can never recover. That's why we want you to practice. You can and will get good at this, but every day, 10 to 15 minutes. I keep saying it because it's true. If you hadn't purchased our book, we have it available. Hey, thank you for the Patreon members that joined us for the monthly question and answer session today. It was exceedingly fun for me. I had folks that are gaining lots of good experience. We're talking about intelligent things, making wise decisions, understanding, had read the books and participated. Just good stuff. It's always good, iron sharpening iron. I particularly appreciate Giuseppe and particularly appreciate the folks that Jay also who joined us. It was really good. And again, if you want to be a Patreon supporter, just follow the link in the show notes. You get to participate once a month. You get to talk. You get to talk to me. We get to talk about stuff, talk about training, talk about practicing, answer your questions, look at the stocks and ETFs you're interested in, practice trading. Happy to do that. And again, thank you so much for all the support, particularly from the Patreon members and from those of you who purchased the book. 13th printing is available. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.